there's a whole bunch of players that are obviously facing that. But, I think if you go up level to address your question, the financial system has lots of intermediaries and it has lots of central counterparties, and blockchain-based technologies can reduce that friction. They can remove the central counterparty. If you're doing that, there's a couple benefits. Speed of transactions can go up, and the cost of transactions can go up. Now, it happens to be that the segment that Ripple is particularly focused on, cross-border payments, has been historically dominated by SWIFT, which also has a very high error rate, because if I'm sending a wire transfer and instead of Dan Murphy, I spell it with one letter wrong and I'm sending that, it's going to get bounced back. If it's going through multiple correspondent banks along the way, that's going to take a lot of time. And I mean, literally, you'll hear horror stories of a wire transfer going missing. Rarely do they go missing forever. That's very, very rare. However, you can have an error, 6% of all wire transfers are ending up bounced back. Imagine if 6% of every Google search just came back with a 404 error. We would not be using Google the way we do today, but it's a reflection of SWIFT was built 50 years ago, and it's a one-way messaging protocol. We can do the same thing with newer, really internet-based technologies. I kind of make the joke that we can stream video from the space station, but we can't move our own money efficiently between currencies and countries. It's just a crazy reality that we live in, and we are changing it bit by bit. Ripple now is doing billions of dollars of transactions, and I said that this region has been clearly progressive and leaning into these technologies and taking advantage of those benefits.
What about in the remittance market specifically, which is ripe for disruption? A number of smaller players now entering into that space and really taking advantage of the cross-border flows that we see here in the UAE and other large remittance markets like Saudi Arabia, for example.
Look, I love this question because the World Bank has published that the average remittance cost is 700 basis points for a population that really can least afford it. Now you think about that, 700 basis points, and the goal, they have set at the World Bank level, a goal by 2030 to reach to 300 basis points. Now on one hand, you would say, well, that's a lot of improvement. On the other hand, 300 basis points, like our goal should be 30 basis points. Like, again, what I struggle with is, this is an audience, this is a community that can least afford these costs, that is being taxed at a much higher rate.
Good early afternoon, 12:53 p.m. Eastern Standard Time on this Friday, September 29th, 2023. I'm XRP Future Millionaire, and I reside in the great state of Michigan. So I seen a question here, and I want to thank everybody who's tuning into the Midday Market Report. Please make sure to hit that like button, as we're going to cover everything from the Dow all the way down to XRP in a very fast and a very strategic fashion. Crypto, does the chart activity tell you if we are getting news or not for the party? Well, like I said leading into it, we'll start with XRP just to address the question. As I stated yesterday, I expected the inverted head and shoulders to play out and come up to 55 cents. I've made no bones about that. And the fact that it made that push up prior to the party, it could tell us that this could be a buy the rumor, sell the news style event. What we need to look at inside of this chart pattern, we came right up. This was my prediction. As you know, I created this right arm before it happened, the swing down. We had this, and I speculated that this was a left arm, like we came down, but this was just a drop bear flag into a bull flag, so we created the setup, and then it dropped down into a left shoulder, inverted left shoulder, head, the inverted head, and then I prophesized that it would swing out into here and make this inverted right arm, and it did, and it held it, and then I swung it up to here, which it did exactly that. So that was my predicted move. Now, the only way for it, like I said, I thought that 55 cents would likely cap any upside. If not, it would have to get above 55 cents and hold, and then we possibly could play up and try to push that 62 cents, which is the rising channel from June of 22, but that's less likely to happen. So 55 cents is more of the scenario to cap any upside during this party, but since we are holding 524, this rally isn't over yet. The moment you get back under 524 and reject there, it's a big problem. So just pay attention to that. If you're watching this, if it gets below that, that's the big problem. Jorge, welcome in. David, good afternoon. Oh, Johnson, welcome in. Thank you all so much for tuning into the Midday Market Report. 45 people here already. I am shocked. 26 likes. Make sure to hit that like button as we will get more and more of our friends in here. As I show my debt of gratitude every single day to each and every one of you. That's why I come on so often, because I respect and I acknowledge your time. Virus, welcome in. So, and then with XLM, before we get up to the top of the Midday Market Report, we predicted the move last night. We talked about after we held in here, we were going to have a move back up, first layer, to move if XRP went to 55 cents. We said it would come up into here at around 11.9, which is what it did. Now we've had a massive retracement. Now, are we going to come back down? That's to be determined. We know if we get rejected here, we can't possibly come back up to the top of the formation. And if we lose this formation, our technical target would be down around 8 cents. If somehow we could gather a massive bit of strength here, you could possibly come up to 14 on a breakout. But that's, or actually higher, but that's a long ways away, folks. The most you should probably look for is 13, but like I said yesterday, up in this area would likely cap any upside unless we have a lot of volume coming in, because we still got to deal with the looming dot cross here for XLM, and it is what it is. Right now we bounce off the 200. This is normal. We're trying to see how bearish we are, and this would give you the further confirmation. You can even fill this pattern out still, so just pay attention. So that's what we're looking at there, and then I might as well hit Bitcoin so that I can get through this crypto real quick. Bitcoin, still in a lot of trouble here. There's not a lot of good news. We still need to break over 27,700 and start pushing up and out. Otherwise, your next technical target, if you do break the 25,194 and this fails, you should be coming down. And it's not 21,966 yet. You got about 22,600 before that, roughly. But there's a CME gap down there for Bitcoin. So now that we're starting to round this way, it looks like we're starting to trend towards that area. So now, let's get into the Dow, because I don't want this to be extremely long. After all, I want everybody to come back to the Midday Market Report. And then if you want to come back to the overall technical analysis for crypto later, more in depth, around 7:47 p.m. Eastern Standard, actually 7:07 p.m. Eastern Standard Time is what I'm striving for now. So come take a look and see if I'm doing it live. So the Dow Jones down 118 points, or 0.35%. Risk assets, commodities, precious metals are all under pressure. We've talked about this every day on the Midday Market Report. Now it feels good that everything is starting to play out just as we theorized. We broke out of the short-term pattern. Now, first of two layers of rejection. You either get rejected at 33,900, or you come up here to see if you're bearish at the formation at 34,440. But it seems a little bearish here, so we're going to see. We do have a long leg doji, which suggests that we'll likely come back up here, so don't get fooled here. So if we do come back up, this is suggesting in today's candle that likely next week we might start out hot here. So very well. Kyle Kupiak, welcome in. Ice. VLF, glad to be here. I am so glad you're here as well. I'm so glad all my friends are here right now. It's awesome to have you, Lee. Thank you so much. Kyle, welcome in. Omar, hi bro, what's up? Glad to see you here as well. John, Kyle, Omar, awesome. Oh, Johnson, Tom, just curious, do you think we'll see a red weekend? Thinly traded weekends. Going in with some green on a thinly traded weekend, your hope would be to make the move before the weekend ends. You could start with a small green start here. I wouldn't say you're necessarily going to have a red weekend. I think you could have a red start to the week. But it all depends. We'll see how it plays out. Like I said, XRP might melt up to the weekend, back up to that 55 cent level for a rejection, or to see if we're bearish or bullish. You very well could have that play out this weekend. Or melt up to the 538 or 542 area, which is the short-term pattern. But with the Dow, we very well could start next week, because it looks like the Fed's going to start buying shit because they got no choice. So it looks like we could make a rally to start the week up to 34,400 possibly. This long leg doji, if it finishes this way, that suggests that we're running out of steam on the way down, and we're probably going to have to go up just a tiny bit here. But it'll all depend on Monday's candle. But that's just what it looks like. So look for a more bullish start to the week, probably in the Dow based on the end of this week. I know it looks bearish. Now with the DXY doing exactly what we talked about yesterday, this feels real good though, because we're on the right track here together in this community. 105 spot 82, we came down to retest the rising channel. If this breaks down, your first layer retest would be the daily at 105 spot 19. If it continues, because we might be getting a rejection here, so just pay attention. If you do get rejected at 106 spot 12, you very well could fall through and have to retest down here a little bit farther. Gold, since I seen gold falling off a cliff, you should be ready for this, everybody. Midday market report, we've talked about this. We've talked about the breakdown. We thought it was breaking down because we broke the formation. We had a descending triangle, which we had the technical move down on a breakdown. We put it on the break up just in case because it did come up here, but we talked about it. We expected it to break down to the 1792 area, likely. Unless we got something obscene, I expect 1792, so pay attention to that. That's what should be on tap coming up next. And then what that means for silver is silver was on the top side here. Now it's fallen through, so what we're looking at for silver is a breakdown here and probably try to come back down to this bottom of this formation. If it stays within here, you could possibly bounce around. And it hasn't broken down yet, so it's kind of a little opposite of gold right now. So just pay attention to these formations because this could very well pull you out a little bit with silver. And that could be why the gold-silver ratio has been speaking of a possible pump. Although it has reversed very hard here. And one could say this is in a hammer candle here. But it's going to have to pull up a little bit farther. You don't want a red hammer. That just means it bought up all the selling pressures but couldn't form a new high. That is not good. So it looks like the gold-silver ratio, it's starting to form what looks like a descending channel here, possibly. We'll see. We'll see. But that looks like a bear flag in the making as well. So, very volatile here. Very volatile. Dean, welcome in. True, good afternoon. Thanks for tuning in, as always. One of the ones who knows the most in here when it comes to the charts. I appreciate you tuning in. You have a wonderful weekend as well, my friend. So that's gold, silver. We did the Dow. We've done DXY. Let's look at oil. Crude oil's just under a small bit of pressure. We talked about so when we get into the crude chart, it's rounding the bottom, and now it's trying to finish off a second tier cup and handle. It's already at the first tier, but we're rounding the bottom. And we talked yesterday we could have a retracement because it could come down here to try to retest the structure. Not all the way down there, I don't think. I think if it's having a retest, it's come below the 3 hour now. It's come below the 4 hour as well. We'll see if this turns into a hammer candle here to end the week. Well, that's the 4 hourly. The daily, see, it looks a little dispersed here. This looks like it needs to retrace. Looks like we came up to our resistance, and now it's going to retrace to test some strength here. I wouldn't be surprised if we had a retest to start the week at like 88, 95, somewhere in there. That's probably how it's going to play out. The 10 years down 0.17% to 4.57% over 10 years. Nobody wants this trash. That's why they have to keep raising it. But remember what we talked about. If it's going to swing around, it's going to have a violent retest. And this is what it's probably doing. Long leg, well, looks like a dragonfly, but a bearish dragonfly maybe here. We'll see. We'll see. It looks like it's got a retest, though, to start the week, but they're desperate to get people to buy these bonds, and nobody wants them. So we'll see if we continue to melt up into the 5% range. So it's going to be a very volatile start to the week, I believe. Wow, 60 people here. Thank you so much for tuning in to the Midday Market Report, everybody. When I was, the bond was at 1 point, yep. B2 gold, get some dry powder ready. Remember, I told you not to buy it at $3. I said, yes, it's a good price, or at $3.12, but I felt like it was coming through based on what I was seeing. And I still think with the gold prices, B2 gold might work its way down to $2.20 area. That PE ratio, price over earnings, is out of control. And I know some will say, well, Tom, it's only at 12. When it was up here more, around the about here, it was over 14. I said, guys, it's out of control. I'm comfortable buying B2 gold when the price over earnings is 8 to 9. not when it's over 12 and 14. That means the price is 12 times earnings right now. That's too high. So I'm waiting for it to come down here. I'm going to add a big bag. So, and we're looking at the dividend. When it gets down there, it'll probably be closer to 6.5% as it works its way back up. So I'll tell you when it's the right time. I'll tell you when it's the right time. I'm not gonna tell you to buy it now when it's not the right time. I'm gonna continue to tell you where I think is the right time. And since this is my midday market report, I know everybody appreciates it because I'm doing you a due diligence here instead of charging for all this stuff. I'd rather just tell you what to do, or not to tell you what to do, but what the prospects are. So we should start tapping into it around $2.40 is what this is telling us. So we could start tapping in for the first buy at $2.40. You missed a lot, Matt. You got to go back to the beginning because we're at the end of the midday market report. My voice is still what it is. I want to thank everybody for tuning into the midday market report. We've went all around the market and I greatly appreciate each and every one of you more than you know. Thank you all so much for making this a viable part of the day. I will see you Monday for the midday market report. Please make sure that like button, but 51 out of 51 have hit it, so I can't complain. If you're watching this after, please hit that like button to help this push through the analytics. With the total crypto market cap, if we do end up with a retracement after and fail to break out past the 1.08 trillion and then ultimately 1.16, we'll likely come back down and rebound on here at about 933 billion. But we have to see how it plays out, but it looks very bearish to me overall. So just pay attention to that. I am so honored, blessed, and thrilled that each and every one of you will tune in each and every day to watch this. Everybody who's watched the XRP update this morning and everything else, I love each and every one of you from the bottom of my heart. And I don't just say that, I mean that from here. Omar, I love you too, my brother. And I appreciate and respect everybody for taking the time to come watch the midday market report. It might not be the most popular, but the 500, 600, 700 people I've noticed that watch, you mean the world to me. Just like everybody else in the community, but you take the extra mile and the extra step to learn the markets at a grander scale. Remember, precious metals and crypto are not enemies, they're allies. You want to have both. Store value with precious metals, crypto as a way to exponentially move your wealth if you buy it in the right moments. It has much better gains than gold and silver, and you can take those profits and continue to expand it into precious metals as a great store of value. Get it out of your native currencies, because especially if you're in the US, it's going to die. And do it while the DXY is at 106. You're getting a premium pricing when you buy precious metals on the way down until the US dollar reverses. It's not that precious metals are getting less expensive. It's that they're expanding the money supply here in the USA. And what happens when you expand and don't contract? Expanding the money supply, contrary to popular belief, is what actually makes prices go up, not inflation. Inflation's just a repercussion of the expansion of the money supply. That's inflation. It happens when you expand the money supply, you inflate, which causes prices to be expandable. It makes prices more expensive. You want to contract the money supply to make prices cheaper. So as we inflate, expand the money supply, precious metals will get cheaper and cheaper, with the US dollar going up right now. Only because the dollar's going up. Once everybody realizes that the money supply is expanding and what it actually means, the DXY will come down and gold will go where it needs to be, and silver will as well. It's only going down right now because of the DXY, not because the money supply is expanding and not because of inflation. That is false. Have a blessed day, everybody, and I'll catch you later on this afternoon.